Good afternoon and welcome to the Altitude Group PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated on the right-hand corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll, and I'd now like to hand you over to Nikki Stella, CEO. Good afternoon.
Thank you so much. I appreciate the handoff. Welcome, everybody. We are thrilled to be here today discussing with you the robust trading that we've experienced throughout the first half of our financial year. Quickly, I can run through some introductions to myself and Graham Feltham, our CFO, and where we are today. So again, I'm Nicole Stella, 17 years of executive level experience in the promotional product industry across the US. Experienced AIM PLC CEO and board member. I have a track record of identifying and capitalizing on new revenue sources, launching product services, and driving profitable growth while all doing strategic planning and raising finance. I'm happy to share with you all that I've been named to ASI's Power 50 list. This is the most influential leaders in the promotional products industry. And with that, I can hand off to Graham, and he can run through his introduction.
Hi, I'm Graham Feltham. Good to be presenting to you today. I've qualified with Ernst Young in 2000. I've been in a few different businesses in Belron, which is Autoglass, Carglass, in StatPro as it moved from traditional software services to cloud software services, and then also in Safety Clean, private equity group, and in Newmark previously for a couple of years, and then I've really enjoyed over my first year now with Altitude. So really happy to be here and presenting to you.
Thank you, Graham. So briefly, what I can do is run through some of the key financial highlights. And as I mentioned to you previously, we have experienced continued robust trading throughout the first half of our financial year. The foundation, when the last time that we met with you and we presented to you, we had talked about how the foundation was set and we were geared to grow. And so the business is scaling, as we discussed with you all at the last presentation and meeting that we had. So the group revenues are up 29.3% at 7.7 million. Our gross profit has increased by 39.5% at 3.9 million. Group adjusted operating profit up of 50.5% at 0.76 million. And one of the nice highlights that I'd like to share with you is that adjusted basic earnings per share. We've increased that to 44p, 145% growth in the first half of our financial year. And we are just about where we were last year at the full year. So we've seen some really tremendous growth across the adjusted basic earnings per share. And with that, I can hand off to Graham, and he can run through some of the, some of the details on those key financial highlights.
So we make revenue via servicing our network of distributors and partners, and via merchanting, where we're the principal in the sale of the promotional product. So our sales are up 29.3%, which is 16% at constant currency. Our services are up 36.5%, which is 25% at constant currency. And our merchanting revenue is up 22.8%, which is 8% at constant currency. In merchanting, we've brought new signings of circa $6 million in the first half of the year of expected annualized revenue. And that's really scaling as we set out to do this year. The adjusted operating profit is up 50.9%. That's 26.3% constant currency. And that's on a comparative of 0.5 million last year, which was related and where we received a 0.5 million government retention credit on employee retention scheme. So therefore, the underlying growth of the business, if you look at constant currency, like for like, that's 0.6 million this year versus a level position last year. So we've really shown the growth. And our net assets are strong, with an undrawn facility of $0.7 million, which we brought in earlier in this calendar year, so around January, February, and that was really to fund the growth in merchanting that we're experiencing now.
that last previous slide, I can share with you that it does show that underlying growth of the business, which, as we had mentioned to you in that last presentation, we anticipated, expected, and we're thrilled to see happening. And one important note too, just to really hammer home alongside of Graham, is that $6 million in annualized expected revenues that we know it will be dropping in throughout the second half of the year. Both very important things that showcase that underlying growth of the business, which we had hoped for, expected, and is happening now. And so you can advance, Graham. Thank you so much. So that industry that we serve, and we'll talk about this. I know we've spoken about this in previous presentations, but just to give everybody that background on the promotional products industry across the States as well as UK markets. Most recent reports state the market for promotional products in the US alone is estimated to be worth about $23 billion. This is post-COVID. And this robust trading that we're seeing, we anticipate seeing a return to pre-COVID numbers. I can't expect when, but we do know that the market is strong, and pre-COVID numbers were somewhere around 25 billion. UK is reported to be about 1 billion. It is a large and highly inefficient marketplace, with 75% of transactions still carried out offline. And then additionally, in this fragmentation that we talk about, there's approximately 3,000 suppliers. We know of that 3,000 suppliers, it's about 300 that are those highly important ones, and probably even somewhere between 175 and 200 suppliers that drive, that 80-20 rule. So 20% of or 80% of the business is carried out by 20% of the marketplace. And then it's got that 23,000 distributors serving a very broad customer base, spanning individual consumers, very large corporates and institutions alongside of nonprofits. So it's really from Wall Street to Main Street. And then that industry that we serve, just walking you briefly through the pipeline and the sort of the pathway of a product and its way of arriving at an end buyer customer. So if you were to have a company such as IBM or Amazon or Chase Bank that were purchasing products, they were purchasing drinkware pieces or t-shirts for their clients or for their employees. At that top yellow column, you would see that that is the end buyer customer, and they would be interfacing with your distributor sales person. So that salesperson in the red column would be processing that order. They are basically the sales force to the industry. And in our company, for Altitude, we refer to those folks as members, and that is on our services side, or affiliates that participate with us from our merchanting side. And we'll dig in a little bit more into that as we go through it. But that red column represents the sales force to the marketplace. And we have somewhere around 2,245 members. So that's about 10% of the market, as we talked about that 23,000 distributors across the marketplace. And then in that blue column, you've got your supplier. This is the organization, company that warehouses products. They have those drinkware pieces, they have those t-shirts. That might be in a massive warehouse where they can pick and pull it, and they actually put that corporate logo onto the product for Chase Bank, Amazon, IBM, whoever it might be. And then they blind ship that off to the customer. Once they've received that order from the distributor, they print that, they pick that product, they print it, and then they ship that out. And then at the very bottom there, you see your overseas manufacturer, that Chinese company, Bangladesh, Vietnam, or somewhere that's overseas that actually is creating the product and then shipping that into the supplier. So who are we? Who is Altitude in the entire process here? So who we are is we are a technology company with combined technology and an experienced team that has a proven service offering, delivering industry scalable growth opportunities and expansion into adjacent markets. It's really important to note that at our core, at the heart of the business is our tech stack. And we'll be talking about that quite some bit today. But then we've surrounded that with experienced team that can go out to market and provide that opportunity to bring in new agreements, new affiliates, new members, new service offerings, and provides us that scalable growth. So where do we sit and what do we do? And we've been speaking about this quite a bit, right? So how does Altitude make money? There's two very distinct segments that drive growth for Altitude Group. To the left, you'll see services. And our services side of the business is comprised of technology and software applications, membership subscriptions, preferred partner programs, and our marketing service programs. And to the right of that is our merchanting programs, which includes our affiliates, AIM Capital Solutions, and our adjacent market programs. And this is where, as Graham mentioned previously, we act as the principal in the sale of the promotional product. So how do we make money? So we'll break this out now. So from the business services perspective, we have for our membership. And so that is that when we spoke about earlier, when I mentioned earlier, that 10% of the marketplace, we have somewhere around 2,245 members. What do they receive for being a part of our community? They receive preferred partner pricing benefits. We manage that entire supplier relations angle for them. So we deliver back to them preferred pricing across our supplier partners, as well as our vendors who deliver back freight programs and shipping discounts. We deliver to them community and networking opportunities. And this is a very important aspect of the promotional product industry. So delivering those community and networking opportunities are very, very important to our distributor members. We also deliver to them education and professional development, expanded marketing and services, products and tools, and then access to our products via our technology platform. So our systems where they can go in, they can search for products, create a quote for their client, and actually push that product straight through, not only to our supplier partner, but also to their client as well. And so these set of services, we derive our subscription fees revenue from providing a broad range of services to distributors, including those supplier relation services that I mentioned, negotiated group discounts, events and exhibitions, catalogs, artwork services, and marketing programs. And we saw in the half year of 22, our services revenue increase to 3.85 million, a 36.5% increase over last year. So on the other side of the coin, within that services program, we have our preferred partner services. And so this is where we provide our supplier partners with services to expand their visibility and sales to the AIM and ACS community. So we drive them to the top of our search engine. So just as if you were searching across Google or another search engine, you're really only going to be searching across maybe the first 1 to 2 pages before you click on something to get the information that you needed. So what do? We drive our preferred vendors to the top of our search engine so that they are easily found across our 2,245 members. We provide top-level visibility across our marketplace product search engine, as I just mentioned. We also give them preferred technology integration opportunities so that we can improve and make more efficient purchase orders. We provide them with guaranteed participation in our publications, catalogs, merchandise campaigns, any way that we can increase their visibility across our membership. And additionally, we provide them with expanded access to the AIM community via social media, events, every possible way that we can drive them to the top of that search. And we derive our revenue through gross transaction fees on orders throughout our supplier network and other vendors and service providers in return for providing those marketing services and promotion of those suppliers and to our distributors. The revenues from this source reflect the value of the resulting purchase orders placed with our preferred suppliers by our distributor network. So that membership is very, very important. And we've seen that our membership throughout this first half of the financial year have really been growing with our supplier network. And again, our service revenues in the half year of 22 increased 36.5% to 3.85 million. So merchanting, how we make money. This is that other side of the column that we discussed a few slides back. So our merchanting programs are focused on operational gearing that drives efficiency and feeds into our services and preferred partner programs. And how do we do that? What we do is we recruit high caliber sales professionals to to become affiliates with the group. We are, as I mentioned previously, the principal in that sale. Our technology use is mandatory, and we provide scalable expansion. This provides scalable expansion and growth back to the group. So this has a compounding effect. Every time we sign an affiliate into our program, that book drops right onto the altitude merchanting revenues. So this provides that scalable expansion that we've spoken about previously, and that springboard into the future for us. So we're providing administrative support to allow sales professionals to focus on what they do best, and that's driving sales growth. And we've seen across the affiliates that we have within the group currently, that administrative support is helping them to really grow their business. And we've seen some really nice upticks in what we expected from them and the growth of their business. So we're deriving our revenue from the sale of the promotional product, which is procured via our affiliates who act as sales agents. So where we had previously been receiving anywhere from 3 to 5% from the supplier from our preferred partner services revenue, now we're capturing revenue from the distributor affiliate as well. And this has resulted in a 3.82 million in merchanting revenues for the year, or for the half year, my apologies, an increase in 22.8%. Additionally, we have our adjacent markets programs. These are non-competitive spaces where we integrate our e-commerce driven technology, which is highly attractive. We provide that supply chain know-how, and we have the facility that remains undrawn that helps us to support future growth. When we last spoke to you, we had one agreement in the adjacent market spaces that we're working through. Today we have 4. So this again is that gearing of the business and that scalability for growth. And we derive revenue from the integration of our technology and the sale of the branded apparel and promotional products in alliance with our adjacent market partners. And we're working within education sectors right now. And previously we'd spoken to you about the opportunities that we have in other adjacent markets as well. So I mentioned to you previously how vitally important our tech stack is. So it is really the heartbeat of everything that we do. And again, we have that experienced team that is really driving home the growth of the business. But our tech stack is what delivers that scalable growth. And our teams, we work within an agile environment, making feature improvements for our industry-specific marketplace. And this provides various design tools, applications, sites, and pop-up stores for our distributors and suppliers. And what we'll find is, and something that we can share with you, is that tech stack is built. So this is over the course of many years. We have really, really built that system for the industry. And so what we do now is, again, we've dug that foundation out. So the investment in that is, those micro improvements, those micro feature improvements that we make each and every, release cycle, that really is bringing in high caliber distributors into our affiliate program as well as our membership. So it's very important to note that has been built, and it is really just us continuously improving upon the tech stack, continuously building out feature improvements that are attractive to the marketplace. And so Tech Suite adoption has increased to 524 users. That's a 32% increase. And we now have 2,658 unique web stores live. That is something that sort of ebbs and flows. We build a pop-up store, and that pop-up store might be for a nonprofit doing a fundraiser or for an employee incentive program, and then those sites come down. So we see those numbers ebb and flow, but we have continued usage of our pop-up store technology as well as our search engine and other design tools and system applications. So some of the efficiencies that we have and integrations that we've developed, these are really important aspects of what we've delivered back and what's driving those high caliber distributors to affiliate in our merchanting side as well as membership. And we've seen an increase in the average size of our distributor. We're attracting higher value distributors now, those that have $2 million in a book of business that are becoming our affiliates. or a $1.5 million distributor that's becoming an affiliate of our merchanting program, it's because of the effort that we've made and the work that we've done to provide those vitally important integrations. So we partner with a variety of companies. TaxJar, sales tax in the US is very complicated. So our integration with TaxJar delivers sales tax know-how within the system so that it doesn't have to be calculated by hand. It's something that just happens for you across our platform. Authorized.net, PayPal, Card Connect, these are all elements of our business that provide that e-commerce experience so that when an IBM, Amazon company comes to one of our affiliates' websites, they can process an order quickly with a credit card. We integrate with QuickBooks, which is a highly used accounting platform across the US. We have integrations with ASI that provides our data feed so that we have 1 million products that all, as I mentioned earlier to you, break out our preferred vendors and make them rise to the top for when an affiliate or a member is searching for products. That helps to feed into that services so that we're driving that purchase through our preferred vendor network. And then we have integrations with FedEx, one of our preferred vendors, as well as many suppliers, so that it all feeds into the system that we can process that order efficiently, take it from an offline transaction to an online transaction that we process through our platform. So this slide may look very complicated, but it is actually a very, very simple slide to take in. So spend some time with it. But really, the purpose of this slide is to show in that bottom left-hand corner our AIM development team. That team works, again, in that continuous, agile, flexible environment where they are making system improvements every 6 to 8 weeks. And so again, platform built, ready for scalable growth, and we just continue to improve it from our side. But one improvement, one effort makes everything better. So one change benefits all. So what does this do? It supports our affiliates' growth, and it attracts higher value, larger affiliates into our merchanting programs, as well as bringing in new members into the AIM community. So, and then to the left of that, you can see our supplier partners. So this pushes their products to the top of that search engine. And then it pushes from there, that center column, through to our members and our affiliates who are able to view stock inventory management levels so that they know, especially with the supply chain issues that have been occurring, they can find if there are 500 black hoodies or 15,000 pens in stock, or do they need to search elsewhere across another supplier that might be on our platform for that same product. It provides them order status information. So there's a great amount of information that our technology delivers back to our members and our affiliates. And then you see that pushing out to that end buyer client, the corporate customer, whether that's IBM, Amazon, or somebody, Joe's plumbing group who's purchasing t-shirts for their team. All of this feeds data back to us that we are able to decipher, to track trends, to deliver back to our supplier partners. And it is that virtual cycle of success that drives growth across our entire community and growth back to Altitude Group. So what have we been up to? And you can pop this one over. So if you recall in our last presentation, those 4 squares or rectangles on the left-hand side of your screen, we had talked about building out the foundation and that gear up for greater efficiency, creating that springboard to success. And so that foundation is built. We are geared for greater efficiency. And the most important rectangle to see in that quadrant is we've gone from ready to scale to scaling now. And you can see that across the numbers from the group. So if you take a look at that right-hand green column with what we like to refer to as Smashy Guy, smashing the targets, the period ended March 31st, 2022, for our half year, that 7.7 million in revenue, and that growth that we've seen across this first half of the year. We are able to exceed our expectations and grow the business. And so, Graham, I can hand off to you now to run through the group performance performance from a financial perspective.
Thank you, Nikki. Yeah, we're looking forward to having a record-breaking year this year. That's what we would like to achieve. So, performance has been strong. Revenues up 29% to 7.7 million. Our gross profit has increased by 1.1 million to 3.9 million, and I'll go over some more about with the margins on the next slide. Our overheads have increased by 0.8 million, and to break that down for you, that's 0.2 million of currency increase, 0.5 million are related to the benefit of the government grant that got set against payroll costs last year. So now we have a more normalized run rate. And on real underlying increases, there's a 0.1 million of increased expenditure on travel and marketing, which is really the expenditure on growing those pipelines, building those pipelines, and getting back out post-COVID to the events and relationship building. We've introduced a new tax transfer pricing program at the end of the last year, so that will see us through with benefits and making sure we're effective tax within the US and the UK, especially with the changing of the UK R&D claim amounts from 130% extended costs deduction to 86% from April, but we'll be efficient going forward on that. And really, that all falls through to our adjusted EPS, for the half year, which has nearly reached the full year of 22. So 0.44p compared to 0.58p, 0.48p for the full year last year. So then, just digging into the revenues and margins. In services, where we've got the membership, the VIP vendor throughput, and the upsell into our membership. We have a high fall through to gross profit of 93.5%. That's improved by 1.2%, and that's with the weight of vendor throughput. So we had a larger amount of our services revenue related to the vendor throughput, and that has a higher fall through. So therefore, that's improved our gross profit margin. Also, with vendor throughput, that's increased by underlyingly 31%, which has outstripped the industry growth rates of circa 13% for the same period, which has been a really strong performance. And then within merchanting, the ACS, and that's with the ACS affiliated selling agents, as well as our adjacent markets, we have a fall through of 9%, which has increased by 1.8% compared to last year. And that's with our ACS attracting supply throughput revenues across a wider range of suppliers outside of our VIP list, as it performs transactions in its own right. And also with the adjacent markets, even though lower revenue, it has a 40+% fall through. So therefore, that actually starts impacting the gross profit margin, even with a low level of revenue. And that's improved the gross profit margin circa 0.5%, with the percentage points with ACS improving it about circa 1.3 percentage points.
And so I think that it would be fair to say that merchanting turnover and gross profit is one to watch, and the gross margin as we grow. Those will be really, really scaling over time, and you'll see those that sort of foundational springboarding effect that we're talking about. And so that's one to watch as we go forward. I would also add to that just something to really have heard. A point that Graham would make was that 31% across our services increase versus the industry average of 13%. So this is from an article posted throughout the industry that was stating that 13%. But what we know that we have done and what we experienced throughout COVID was that our distributors, joining the membership had grown. So we had some attrition, which we've spoken to you all about previously, from those lower value distributors who decided to leave the membership to either close down their businesses, sell their businesses, or retire. And what we replaced that with was distributors within the membership that have a higher turnover. And so what we're seeing now is that higher value distributor churning and that increase across our services, because the growth of our membership and the value of those businesses and the usage of our preferred vendor network all feeds into our services revenues, as well as the merchanting. As we sign high value distributors, that will also feed into our supplier partners and our preferred vendor network as well.
So then we move towards our financial position. We've got a strong financial position, improved cash, and our facility remains undrawn. But I delve into a little bit more in depth in the trade and other receivables and payables, and therefore I won't repeat that in the cash flow on the next slide. So trade and other receivables are up 0.9 million, and that's related to increase in FX or the FX impact and the increased trading activity. That's countered by the unwind of the government retention scheme that we received at the end at this time, in September last year, and therefore was set over a period of about eight or 9 months or so against our payroll taxes. So then with trade and other payables, again, we've got FX impact and the increased trading activity, and that's countered by the repaying of all our time to pay cash management strategies that we put into place with VAT and PAY with the UK HMRC. They were fully paid off within this half year and unwound. So now we've got a COVID-free balance sheet, and there's nothing outstanding due to the last couple of years. So we've got a current position, which I'm very happy to say. And then on our cash flow, so with overall, if you look at the net decrease in cash and cash equivalents, 0.16 in the half year, that's comparative with 1.5 million in the half year last year, where it was the business coming back in after COVID, really, with all the activity increasing. Therefore, there's a bigger outflow. However, along with the items I've mentioned about, that are countering it, the unwinding of the government retention scheme and the repayment of the HMRC and PAYE, therefore that's flat. That's reduced our cash outflow to 0.16.
Thank you, Graham. So from an outlook perspective, again, the group experienced robust performance across both key services and merchanting programs, showing significant growth on the same period last year. Strong, consistent, and upward momentum in the performance of the business in both revenue and profit growth, that's demonstrating our ability to execute on the strategy that we've set out. And that continued robust growth is anticipated into the second half of the year as well, with new partner agreements signed across all key programs and the growing new business pipeline. So when Graham spoke about earlier in the financials, we have been working through and investing in, and that travel has opened back up again. We are building a pipeline and we are working to bring in new business, and that is showcased in that 6 million of annualized anticipated new revenue that will drop through. That's going to start to drop through across the business now. And we've seen that consistent, robust trading continue through this half year period. So we've started off the first couple of months of our second half of the year very strong. I'll add to that we are cognizant of the macroeconomic conversations that are happening, particularly across the UK. I've shared this with all of the folks that I've met with across the UK as well, that those recession woes and concerns about inflation in the US, it's sort of divided into three aspects. 1/3 of the experts in the US are talking about recession now. It's going to happen. Please be mindful of it. Watch for it in the future. Then you've got 1/3 of them, experts stating that we've been in a recession and we're starting to come out of it. And then 1/3 are saying, what recession? From the perspective of the promotional product industry, we've not seen a slowdown in growth. So that is really one of the important factors. That robust continued growth has happened, and it continues throughout this early part of the second half of the year for us. Are we watching it? We are indeed, and we are spending a great deal of time ensuring that we are paying attention to it. But we are also very, very confident in the future scalability and success of the business, and also the executive management team's ability to successfully execute on the group's strategy. So finally, I can read this off for you. In the first 6 months of the current financial year, the group experienced a robust performance across key services and merchanting programs, showing significant growth on the same period last year. The continued strong, consistent, and upward momentum in the performance of the business in both revenue and profit growth demonstrates the group's ability to execute on its strategy. Based on the performance in the year to date, the board was pleased to announce on the 22nd of November 2022 that the group will exceed market expectations for the full financial year and achieve record year-end results. With continued focus on scaling the business and a healthy new business pipeline, the group is well placed for accelerated future growth, and the board is confident in the long-term success of the business and its positive outlook for the future. So I think that it's really important to note, as we discussed previously, that we've gone from ready to scale to scaling now, and you're seeing that fall through, and you're seeing that happen as we progress through the first half of our year and into the beginning part of our second half of the year.
Absolutely, and just by increasing activity within our network, with our affiliates, with our members, then it's a symbiotic relationship, really. The affiliates, when they come on, they use our tech, they get our support, and they actually now then can double in size compared to if they're on their own. They would be capped to that. So that's something that we're really seeing, and it's a true part of the scaling that we're offering.
Exactly. And so we have a question here. What investment is needed moving forward into the technology stack, and what does the roadmap look like? So, as I mentioned previously, our tech stack is built, and it is built for growth. So I'm really, really thrilled with where we are in terms of our technology systems ability to grow with our vendors, to grow with our affiliates, and with our members. So one of the important aspects of that is that we work within a continuous improvement, agile environment that's highly flexible. So we have a dev team in the UK, and we have a roadmap with releases that happen every 6 to 8 weeks. But it's really not for business development or technology development, the full tech stack, because that is there. These are small micro improvements that continue, and integration projects that continue to drive high value distributors. So going from the average turnover of 500K in a year to bringing on and attracting the 2 million, the 1.5, 2 million, $3 million per year affiliate or member. And then from another question that we have is, which, in your opinion, offers the group greater upside, services or marketing? And can you please talk a bit to your plans to grow through M&A?
So I think that would be referring to merchanting, in the services or merchanting, probably.
Oh yeah, I think so as well. Thank you, Graham. And please chime in along with me. These programs really dovetail. And so as we grow, affiliates in the merchanting side, I mean, I think you're going to see accelerated growth on that side. Wouldn't you agree, Graham?
Yeah, before I joined, what Nick has done is grow the services business and really get that working very effectively and efficiently, and with fantastic relationships. That's funded the growth in merchanting, and then the focus now therefore is growing on the merchanting arm, whilst getting the benefits and keeping the services working effectively. So that whereas there's a high fall through in services, there's a level playing field. Well, there's a level kind of people resource to keep that going. But with the merchanting, then that's something that we're growing steadily and within our means, so that then we can deliver sustainable, profitable growth. So they do work together. It would be my quick answer.
Yes. So as I mentioned, it's that dovetail effect. And but additionally, as I had mentioned when Graham was going through the financials, you can really watch the scalability happening on the merchanting side when you look at the turnover when we release, next results and the results after that as we go forward. And I see that there's a question around overheads, which we can also tap into, Graham, speaking about how much of the overheads is UK based, and what is the scope to reduce. We have our dev team, so continuing to manage our UK development as they work in that flexible environment and that agile environment and development of feature system integrations, and driving greater efficiency is very important. However, I think the question is really, will we need to drop in overheads to scale the business? And that's one that we can certainly speak to, because that growth in terms of staffing and overhead is really incremental. And Graham, you can speak a little bit to that.
Yeah, we've got UK based. We've got UK operations that support the UK revenue, which is a profitable arm. So therefore that satisfies itself. Then over and above that, there's the central PLC costs, which are based in the UK, and we keep a very close we'll keep a close eye on all costs everywhere, but we keep a very close view, and me and Nikki keep very tight on decision making process about what we spend money on and why. So therefore, why would we reduce the UK overheads? We wouldn't. We wouldn't right now, in the way of it's delivering, and it would be that answer.
And I think that also to the incremental additional of and hiring, it's not an area where in merchanting that we would anticipate excessive hiring having. We really are geared for that growth. So I think from as Graham mentioned, we are always carefully watching overhead and all of the things that we spend within the business.
Absolutely.
So I see also a question around, given the recent good results and upbeat forward-looking statements, why is appetite poor? And also, what are we doing to increase investor awareness in the company? And so what I would say to that, I think that we've seen just the UK markets in general currently have been fairly dour. Would you agree, Graham?
Absolutely. It's we're seeing is there's quite a lot of retail. So there's some retail who are exiting the market, in effect, i.e. taking their cash out, but there's also low liquidity levels within institutions. And that's a problem across the board, not just for us. But then again, what's happened is we've been building communications and trust up. That's certainly been our aim with our shareholders and our investor community, and so we're doing a lot relating to going out on roadshows and telling the story, telling a repeated story. So this presentation here is similar in style to our last one, and it's about reiterating what's important and building that, and hopefully exceeding expectations. So that's what we've been doing, and I think you saw the uptick in the share price. I think that's because therefore we've been doing that,
communicating out to the market.
Trend.
Yeah, and I think that really is a part of the macro environment that sadly we just can't control. And I'm just sort of taking a quick peek through some questions here, other questions. So talking about expansion plans, and there I saw previously a question about M&A, and we're always looking for opportunities. Right now, we're very focused on delivering this financial year. but we're always looking for opportunities to expand the business. And so expansion is something that that we are building upon currently. That scalability and that springboard into the future. We're seeing that again happen right now. Highly focused on this financial year, and are always eyeing opportunities in the future to grow.
Yeah, I think, and on one question, there's about churn rates. I suppose just if you look at the affiliates on the ACS side, that was being built up over the last couple of years throughout COVID, and there was an element of churn and necessary churn in that. However, where we hit the FY22 close position, that was where the platform, where we felt we had a good platform. That's where the affiliates were of high quality, and we had aligning the stars with our technology platform. Then basically it's ready for scaling, and that's what's happening now. So we really have very little churn. It's really about growth.
Absolutely, and you see in the two angles of merchanting, for some of the adjacent markets, those are very longer agreements, so the churn on that is very low. And then and as I mentioned, we had one agreement in that space, and now we've increased that to 4. I expect that to scale as well. And then with the affiliate program, that also has a very strong vetting process, and the churn on that is very low as well. You would anticipate seeing long-term affiliates. It's something that's very difficult to move away from, and it's sort of an investment in that growth of the community, which is what affiliates are looking for. So strong services, providing strong services back to them, and they stay long-term.
And working with them on the tech as well, I think it's been really improvement, that referral processes. So when we really listen and understand what's if there's what their feedback is on the tech, and they see responsiveness on that, they bring that repeats around. So they tell their friends, in effect, and they come along and join us as well. So it's really strong.
And so what opportunities for new business, what do they look like, and typically how long does it take to convert? I can share that we are building our pipeline. We have very strong pipelines currently, and we are converting, and that really shows in that 6 million of annualized anticipated revenue to drop through. We're not stopping, so that will continue to grow, and that has that compounding effect that we spoke about. I'm just making sure that we're hitting the questions. And then, what does merchanting business look like in 5 years' time? I think that it's something that, if the average affiliate has somewhere between 500 to 500,000 in annual turnover, you can sort of do the maths on that one to think about what that could potentially be. And we are as good as our sales team is, because the systems, the programs, everything that we do has been built out. And again, it's really about that springboard into the future, and continuously improving on our technology in those micro. Again, very important to hit on that micro improvements to thrill and delight them. And so really, this is now a job for the sales force, and we have a very strong sales culture, and we'll continue to grow into the future. I think that's everything. Correct, Graham? Am I missing anything else?
I think so. There's that's certainly the main lot of them there. Just having a look.
So, given that I don't believe we have any further questions, if I've missed anything, we will certainly reach back out to you and answer any questions that we may have missed. But thank you so much for your time in joining us today. And again, we're looking forward to that continuous springboarding effect, and that growth into the to the annual year and beyond. So thank you so much for your time with us today, and we look forward to meeting with you again at the year end.
Absolutely.
Nikki, Graham, thanks once again for updating investors today. Could I please ask investors not to close this session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Altitude Group PLC, we'd like to thank you for attending today's presentation, and good afternoon to you all.
Thank you, Alessandro.
Thank you.